All right, hello, my fellow investors. This is the Intelligent Investor here, and in today's video, I will be telling you a little story. Now, before we start that story, guys, use the link in the description down below to sign up with Acorns. Once you sign up with Acorns, you're going to be entered to win a free stock, and that stock is Lockheed Martin. So that stock giveaway will be done this upcoming week. So stay tuned, stay subscribed. Also, if you guys think that $3 is a lot for Acorns, once you sign up, you can easily go up here. You can go to settings. You can go here to my subscription. And then you can click on the light version. So you can easily go up here and then switch the plan. For me, I like the personal plan because I like using the checkings. I like having my Roth IRA and my investment portfolio. So I completely love this plan. I'm telling you guys are not going to regret it. It's something that you guys don't really have to pay attention to. You can actually just leave there, invest on your own, and they'll do all the work for you. So I completely love Acorns. And by signing up, again, like I said, you're going to get a chance to win a free stock, and that stock is Lockheed Martin, $340 stock. So it's not bad at all. Um, Now, let's kind of jump back to the video. Now, what's this story about? Now, I want to talk about how or what is the difference between long-term investing and option trading or day trading and stuff like that. Okay. um, Now, jumping back in 2009, sorry, that's when I started investing, and one of my best friends started investing as well. All right, so it was, yeah, back in the market crash, all that stuff. We were both 18 years old. I was 17, he was 18. And we both kind of started investing. We both got the same job, and we both started putting in $100. We went to Fidelity, and we opened up an account. We dumped in about like $100 to start, and then we did an initial deposit of like 1,000 after we got our like paychecks and stuff. So I mean, yeah, we both bought into like some decent stocks, kind of like Coke, and um, I got into some other stocks that I don't have anymore, but Coke, I've kept it since then. So, we were both learning how to invest and stuff like that. I mean, we were in a that place in the market, but we were young. We didn't really know much of it. We didn't really care. We had our basic jobs. We were going to college, and yeah, I mean, that was just something new to us. So, Fidelity did have a fee of like $7 or something like that, or a little bit more, which every time you bought shares of, like every time you did a transaction, you had to pay. So before Robinhood came, you had to pay fees to buy stocks. So we had to actually save up money, right? Um, so yeah, so we eventually got into that, and throughout the years, we kind of joined SureTrader, which is a day trading platform, um, and like that was after, yeah, we hit about like 20,000 or something. We were both there, right? We kind of failed and succeeded. This took a few years. This was back in 2012 when we actually started day trading. Um, and yeah, I mean, throughout that time we were learning. You get me? So we kind of knew how to day trade a little bit, but we weren't too good at it. We did some option trades as well, and we succeeded some, and we lost some there. And we both had our biggest loss. I ended up losing. It was about, we had a like $40,000 portfolio, right? Um, and I lost about 30,000. He lost about 29, 28. I was a little bit more stubborn, but we lost a lot of money. And then we kind of started from scratch again back in 2012. So then we're like, okay, let's try this again. We were both gonna quit, but then we were like, oh, let's try this again. And like, okay, we kind of tried it again. We started learning. We started busting our butts off, learning and learning and learning. We got a mentor, and yeah, we finally learned how to do some good options trades. Um, and 2013 came, and that's when we started being a little bit more profitable. We're making a few $100s here, a few $100s there, and you know, we started making some money. He started learning a lot quicker than what I did, so he was making a little bit better profits. But we still had similar portfolios. So 2014 came, I think, and then Robinhood came. And then we both signed up for Robinhood. Robinhood was zero commission and all that stuff, so we decided to jump into it. Now, it wasn't as good as it is right now. I mean, it's still improving. The app is doing well, but I mean, it was zero commission fee, so we started going in there. We started making swing trades and stuff like that. So we were both making money and stuff like that. So we grew our portfolios pretty well because, again, zero commission fee. We were doing good swing trades, and we grew our portfolios. So we both had about, what was it? It was 60, 70,000. Okay. And, we kept doing that. So for me, I was like, oh, I started learning and reading books like from Warren Buffett and, The Intelligent Investor, all that stuff. I started reading all these books, Get Rich with Dividends, and, I started reading all these books, but he was still options trading and swing trading and stuff like that. So he was making good money. And I was like, okay, I'm gonna get $60,000 of this money, and I'm like, it was right before Apple was getting too popular, and um, people started becoming, as they call them, Apple sheep, and I mean, whatever. So, um, I was like, all right, I'm gonna invest about $30,000 in Apple, and I invested about $28,000 in Tesla, and my friends are like, oh, that's stupid. Like, you're not, those stocks don't move that much, They're kind of slow. And I'm like, oh, well, they're, I guess, long term. I was reading like all these books and they were saying like these are good stocks. And, doing my research, I think they have potential. And it was my Fidelity portfolio. So I had um, Apple, I had Tesla, and I had Coca Cola. So I was getting dividends from Coca Cola and stuff like that. So, I mean, I was happy. I had like $20,000 in Coca Cola. So, um, because I never touched Coca Cola. So, uh, yeah, so I had that, and yeah, I guess like I said, I invested in Tesla and Apple, and my friend was like, "Oh, that's just money that's just sitting there." And I was like, "Yeah, I mean, whatever. I'm just gonna leave it there and not pay attention to it." So I had about $10,000 left and a free money, and I was like, "All right, well, I'm just gonna do." The same thing that I was doing before, I grew this money in 2 years. Now I'm gonna grow this $10,000 again. So I started doing swing trades and some options trades, and I mean I was doing good. So I started increasing my portfolio. But my friend, his overall portfolio was already at 100,000, and I had my portfolio at like 80. You know, and he's just started beating me. You get me? So he was doing swing trades, options trades, stuff like that. Like I said, he kept doing that, and he's still doing that now. And then I grew my portfolio, my Robinhood portfolio. I grew it. I think I recorded these videos. If you can go all the way back, because I've been doing YouTube Robinhood for I don't know how long. So I've been doing YouTube for a long time, but I think I saw those videos. I'm not sure. So yeah, so I mean, I started out fresh, and he was already building up his portfolio, and then he moved a lot. He moved all his money to Robinhood because it was zero commission fee. So yeah, so he started doing that. I mean, he didn't have options trades in Robinhood yet, but he was doing swing trades, and he did some options trades, um, and E Trade. So sorry, I'm all over the place, but yeah, trying to get to the story. So whatever, I had an 80,000 portfolio, $80,000, and then I grew it to 90,000, and then he was at 130, and 2016 hit, and that's when the market started going up. So that's when he hit about 200. So he kind of quickly beat me there. My portfolio was at, you know, 150 and his was at 200. And then, yeah, 2016 hit. And, you know, I'm just going to say his portfolio now is at like 340,000. And he's still doing swing trades and options trades right now. And like I say, options trades and swing trades and stuff like that, if you do it the right way, because he's really good at it. I mean, we both ended up working in Wall Street, and you know, we both quit at the same time. But like I said, he made his portfolio right now is around 340,000, and because I held Tesla and Apple, they ended up blowing up. They did stock splits, they blew up again, and they did stock splits. So my portfolio is in the seven figures, and he's still in six figures. That's all I'm gonna say. So because I held two huge stocks long term, which was Apple and Tesla. Now my Fidelity portfolio is much bigger than his. So, I mean, at the beginning, like I said, he was much, much higher than I was. Okay, he was beating me by 150,000, stuff like that. And now I'm beating him by much, much more than that. So, and the reason was because Tesla and Apple ended up blowing up. And if you guys see the history, they blew up. Then they did a stock split. They blew up again. And then Apple did another stock split, and now it's back at 121, or it's at 121. Tesla is at 692 because Tesla went up. I forgot what price it went up. I don't know if it was like 300 or something or more. And then it did a stock split, and then it did this huge write up. So Tesla has been really, really good to me. I mean, even to a lot of people. So that made me hit the seven figure mark in my Fidelity portfolio, and he's still in the six figures. And like I said, I mean, I locked in some profit, so I sold out of some stock. I locked in profit, and then that's when I started buying into AT&T. I bought more into Realty Income and Chevron. So I made profits from Apple and Tesla, got that money, and just redistributed it to other stocks, which now I'm doing a dividend portfolio. And I kind of have that mentality of being patient. Okay. So now I'm slowly, you know, redistributing that money to safer stocks. And I still have my growth stocks. But like I say, he lost his opportunity because he was doing options trade. And yeah, for the past, what was it? Let's say 10, 12 years that we've been investing and trading. I mean, he got a good return, you get me? And this is the thing I'm saying. There's a lot of people out there right now that are like, options trade. Yeah, let's make quick money. Let's learn how to make quick money. And yeah, they make good money. You know, they make a few $1,000s here and there. They probably will get to $100,000 faster than you. But in the long term, if you keep a stock that has so much potential, then that's where eventually your returns are going to hit. Okay. So, like I said, with Tesla and Apple, I mean, nobody thought they were going to be this big. I mean, they were already pretty decently big, but Apple and Tesla ended up hitting in the last, what was it, 6 years. And Apple actually recently too, as well, the last few years where it started crushing it up. So that's the thing that I'm telling you guys. If you guys have patience and faith, stocks can go a long way. And for me, like I said, EXPC and ACIC, they're two companies that I feel that could eventually hit those huge marks. Now, I don't know. It might take 10 plus years, but if people are options trading these companies or whatever they're doing swing trades or options trades, they're never going to hold these stocks at this price. Okay, these are super low prices. If you look at inflation and all that stuff in the future, if these stocks do blow up, then in the future you're going to be like, yeah, I got them at this price. And those people that are doing options trades or swing trades, they were never able to hold this stock this long. So this is what I'm telling you guys. You can easily hold good stocks for the long term and do swing trades here and there. But first have that mentality of, being patient, being, hey, I'm going to have my good base stocks, and then leftover money, let's say I would dump in an extra $100 a month to do some swing trades or option plays. But I've seen portfolios here on YouTube and stuff like that where I see this guy that has $150,000 portfolio and it's all in penny stocks. And it's like, that is insane. That's just, I don't know how the heck people do this, how they throw in a bunch of money on dumb stocks. And I understand there's a lot of YOLO people, and okay, whatever, you want to make quick money, yeah, but it's not always going to be like that. We have been in an uptrend market. It's not going to stay like that forever. Once we hit a market crash, which I predict we'll have a market crash within the next year or two, all that money's going to be gone, and those stocks are not going to recover. Okay. And it's not talking bad about that. I mean, people have different methods of investing and trading, and I'm okay with that. I mean, you can make money in different ways, but I'm telling you, long term investing has been a proven fact for me that it's better because, like I said, I mean, Apple and Tesla are still good buys at this price. They can still grow and they'll still create more stock splits. So there's still potential there. And this is the story, guys. I wanted to tell you guys that. I mean, again, like my friend, he was killing it and he's still killing it. But most people when they day trade and swing trade, you don't invest more than $25,000. People that are doing, like I said, $100,000 in risky stocks, that's just stupid. You only do $25,000 when you're day trading or swing trading or how do you call it? Options trading. You don't go over $25,000. Okay, that's just a thing. It's like a a pattern that you have to kind of follow. It's a law that you have to do so you can minimize your risk. Okay, and yeah, guys. I mean, this is just what I wanted to tell you guys. I mean, options trading and swing trading and all that stuff. I mean, it's good, and everybody wants to learn that, especially millennials. I'm a millennial. Everybody wants to learn how to make quick money, but your big shots will come with good companies that can blow up. And like I said, it helped Tesla and Apple for a really long time. They weren't doing much. They did grow. They did do some stock splits, and I was like, okay, I'm getting some decent returns. But then they blew up. And like I said, my friend is still in his six figures, and I'm on my seven figure. I'm more than quadruple of where he's at. So, and like that, he was like, crap. I mean, whatever, man. Like, fuck. Like, damn. Like, he was just like shocked that this happened. He's like, I mean, crap, you beat me to that, But I mean, he's like, he's still happy. I mean, he's still making his money. His portfolio is growing. He's getting close to hitting 400,000, and he's pushing it hard too, But I mean, he's making good money. But I've made more than him, and that was because I bought into something that I knew I didn't know, but I mean, I felt that it was gonna hit, and it did hit. The numbers didn't lie. I was patient, and it blew up. Now there's a potential of Tesla and Apple blowing up again. There's a chance for EXPC and ACIC when it turns to Blade and Archer to blow up. So if they do, then my portfolio is going to grow much more. And that's the thing I wanted to tell you guys, that it's not bad to do options trade, but taking this route is not bad at all either. So, I mean, that's all I want to talk about in this video, guys. If you guys did like the video, again, please like, share, and subscribe. If you found it informative, then, hit the like button, share it, and sign up for Acorns because, trust me, you won't regret it. So, thank you guys for watching, and I will see you guys next time.